Mark, the popularity around the Steepener trade right now, betting on a potential Trump 2.0, seems to be the go-to way to play these headlines. How long does it last?
Yeah, that's a great point, Kriti. I think that people are defaulting that to the moment. I'm slightly unsure on that one in terms of that it works because of the current economic backdrop as well. I could see a scenario where Trump falls in the polls and yet we don't see a massive unwinding in that Steepener trade. What I mean is that I think people are, the election or the debate last week and the focus in the election is helping people realize that all candidates are essentially fiscally positive, and therefore that means probably higher long-end yields. At the same time, we're seeing some softness in front-end growth. So the economic backdrop is kind of helping that narrative of a little bit of steepening. Yes, people are talking about it being fueled by the politics, but I think it's a little bit of the narrative fitting the data at the moment.
Mark, I read your piece on Bitcoin yesterday, double top. Looks like that's the story on the chart as well. Dismal second half potentially in prospect. Bitcoin in some ways is a proxy trade for tech. Like in some ways, not completely. If Bitcoin has a dismal second half, does tech have a dismal second half?
Yeah, I'm really struggling with this one, guys. So I should point out that, first of all, this is based on a technical signal that's worked perfectly since December 2021. I want to emphasize it's only about technicals here. There's no fundamental reason here. There rarely is in Bitcoin anyway. Technicals tend to be the main guide there. But if these technicals work, they imply that Bitcoin does have a dismal second half, as you say. Now, one of the things is what are the correlations to the rest of the economy? Generally, we've seen Bitcoin collapse in a risk-off scenario. It has showed the greatest kind of link to those kind of tech stocks. However, I think that, you know, the crypto economy is not overly linked. We've seen this when we've seen some really dramatic moves in both directions, that the spillover hasn't been as big as many of us expected, including myself. I thought before that if you saw a complete kind of fallout in crypto, that would spill over to retail traders bailing out of other stocks, and that would be a wider route. We've not yet seen that dynamic. So I think there's potentially a scenario here where crypto can sell off without it being a risk for the broader economy, but I am very open-minded to maybe it's an early warning sign.
Is the Friday trade tomorrow positioning around payrolls or preparing for the French election?
I think that the payrolls really matters because that ISM data, I think we really care. I can see us moving beyond payrolls extremely quickly. Everyone's watching that unemployment print. What I'm slightly worried about is we're talking about unemployment print. Do we get a little bit of a stagflationary impulse, i.e. we still get high wages and yet we get signs of job market softness? Because that is what the ISM data was yesterday. Still high prices paid, and yet the economy seems to be slowing down quite markedly. So I think that's the real focus in the short term. But as soon as non-farm payrolls out of the way, then we start focusing on French election, and that will matter into next week, even more than the last round of the election.